Why was commercial paper key to shadow banking? Imagine a financial world where companies and institutions can borrow and lend money without going through traditional banks. That's what shadow banking is all about. It's a system of financial activities outside regular banking regulations. Now, how did they manage to fund all these activities? The answer lies in a simple yet powerful tool called commercial paper. Commercial paper is a short-term, unsecured debt instrument issued by companies to raise quick cash. It usually matures in less than 300 days, often just a few weeks. Because it's short-term and liquid, investors see it as a safe, cash-like investment. Shadow banks, which are financial entities outside the regular banking system, used commercial paper to fund their operations. They needed a way to get large amounts of money fast, without the restrictions banks face. Unlike traditional banks that relying on deposits insured by the government, shadow banks raised funds in the wholesale capital markets. They issued commercial paper to investors like money market funds and institutional investors who wanted safe, short-term investments. This gave shadow banks a steady flow of cash to finance longer-term, often riskier loans and assets. They could turn these longer-term assets into short-term debt, a process called maturity transformation. Commercial paper was essential because it provided liquidity. Shadow banks could quickly access funds to meet their immediate needs. It also allowed them to grow rapidly, since issuing commercial paper was less regulated than taking deposits. They could bypass some of the rules that traditional banks follow, which made it easier to take on more risk and expand their activities. Another reason commercial paper was so important is that it helped in securitization. Shadow banks pooled loans into securities, then sold them to investors. To fund this process, they issued commercial paper, turning risky loans into short-term, money-like instruments. This made it easier to attract investors who wanted low-risk, short-term investments. However, this reliance on commercial paper also created vulnerabilities. Because it's unsecured and short-term, investors could withdraw their money quickly if they lost confidence. During the financial crisis of 2007 to 2008, the commercial paper market froze. This caused liquidity problems for shadow banks and contributed to the wider financial panic. In short, commercial paper was a key tool for shadow banking because it provided the quick, flexible funding needed for their complex activities. It allowed these non-bank entities to perform bank-like functions outside of traditional rules. While it fueled growth, it also made the system more fragile during times of stress.